Exchange. And today I'm here with James Gavilan from Gavilan Commodities. He is the principal over there. And we, as part of our educational and web series that we're doing, he's got some unique insights into risk management and some capital raising strategies, which we think you'll find of interest. Welcome to the show.
Thank you, Barrington. Pleasure to be here.
Yeah, sorry, you're going to be steering this this episode for the most part. So let's tell us a little bit about who you are and what it is you do.
Thank you. It's great to be here, and I appreciate the opportunity to talk about very exciting times in the markets. As noted here, my name is James Gavilan. I'm the principal advisor for Gavilan Commodities, which is a management and consulting group that focuses on providing advisory, risk management, and marketing services to the broader global commodities industry. And today we're going to take a look at, really look at the market from a broad point of view as far as liquidity, and then drill down into reasons why capital has been difficult to access, and then go a step further and look at some risk management tools for financiers that are looking to deploy capital into the space. So here we will begin.
We think it's a very, very timely subject as far as what's going on in the pre, during, and post-COVID. So thank you for taking the time.
Absolutely. You couldn't have been more accurate with that statement. The pandemic post and pre has absolutely altered the entire capital landscape. And aptly stated, the title of my presentation is "Dude, Where's My Capital?" Risk management and working capital solutions for industry participants in industrial hemp, medical and adult use cannabis, and the junior mining sector. As you know, Barrington, your CSE exchange does have quite a diverse listing of cannabis stocks as well as metals and mining stocks. So we will be talking about throughout the presentation, certain points respective to mining and also to cannabis.
Awesome.
A little word here about Thriving Roots Collective, which I'm actually a founding partner of. Thriving Roots is a collection of professionals with decades of experience in marketing, technology, law, and finance, and we are looking at providing business development and consulting opportunities to the industrial hemp, medical, and adult use cannabis market. A lot of the work that I've done with respect to capital in the broader cannabis market, the feedback I received from the lenders has been very interesting, and we'll be speaking about that during this presentation.
Awesome.
So here we're going to start on a broader level and then sort of drill down. I wanted to give a little bit of an update overall just of the broader cannabis market. So we're going to go through a few slides and look at the market from the industrial hemp space as well as medical and adult use cannabis. Starting here, I'm sure many listeners and participants have seen this chart, which is some great data been compiled by New Frontier Data. I found them to be a rich source of information for the broader cannabis market. And in this chart, we can see a pretty steady trend of growth starting from 2016 to where we are now. It's almost 3 times over. And at least according to this analysis, by 2025, we'll have about 30 billion in sales. And what is interesting here, as you can note, the projections at least have the US as a pretty large share of those sales. So as we'll see in the next slide, the reality of that is actually very interesting. This is a chart here where we can see cannabis demand expressed between illegal and illicit and legal sources. So looking at the chart, you can see that overwhelmingly it's a lighter blue, which is essentially saying that across these major states, California, New York, Texas, etc., there's quite a bit of room for legal demand to take over this cannabis demand. So we are positive in that respect that if regulations and acts and law keep moving forward, we will be able to see this chart ideally in an all dark blue setting.
What I like about this chart is, or what I find curious, is California and how it's what I would call an advanced cannabis marketplace.
Exactly.
on both sides, and it has remained steady over the past couple of
Absolutely.
years.
Very good point there. And switching over to industrial hemp, which is, of course, all part of the same, cannabis family, if you will. This is a nice representation of sales from industrial applications, which, as in 2018, just came under $800 million. And what is of note on this particular chart is the really development that we've seen in Europe, kind of leading the charge. They have 54.7 of that sales figure. And then also of note is China, which is only at 7.6. However, they're the largest exporter of hemp. So we will, it'll be interesting to see how that supply chain dynamics in the post-pandemic world change. And we'll touch up on that a little later in the session. Rounding out the market snapshot is another point with respect to interest and demand. And this is essentially hemp license issued by state in 2019. And the numbers are there. Unfortunately, the prices also reflect this overwhelming application process. But you do have about 328% increase in the issuances of licenses since 2018, which is exactly when the Farm Bill came out and basically removed industrial hemp from the and added it into the major crops that are already bellwether crops such as wheat and corn, et cetera, which allowed for full federal acceptance. And in total stat, we have about 480,000 acres of available acreage that has been licensed for growing and processing hemp. So overall, in these few slides, you can see that albeit there might be some depressed pricing in hemp, and some concerns about the overall cannabis market, the signs do kind of point towards improvement in the years to come. So here we are, going to begin a little bit of a discussion about liquidity. So I just wanted to highlight a quote from the former heavyweight champion, four-time world heavyweight champion, Evander Holyfield, who unfortunately in 2008 ran into a little bit of a financial difficulty. And at the time, he was famously quoted as saying, "It's not that I'm broke, I'm just not liquid."
Right.
Which you can look at it either way. But unfortunately, in this market, in the next few slides, we are going to discuss liquidity and really look into how that liquidity is being compromised from a larger banking level. We'll drill down into commodities and then see in the cannabis space the similar theme. So in the next coming slides, we're going to look at banks specifically. Starting with the chart on the left, I know there's a lot of data here, but we'll be able to wade all right through it. The left chart, as it notes there, there's been large increases in provisions for loan losses. So as we can imagine, in the post-pandemic world, there's a lot of concern about the hospitality sector, rental income, and overall defaulting on loans. We're seeing a lot of companies that are accessing the loan programs issued by the United States. But really, in this chart, you can see how the banks are bracing for a lot of more loan losses in future months. Just looking at the upper left chart, you have Q1 loss provisions of $8.2 billion by JP Morgan Chase, but the prior quarter was 1.4. So you're looking at almost a 6 times increase. And throughout the other 3 larger banks, there's just multiples of an increase with respect to loan losses. Further adding to the liquidity snapshot, we've had some one-off events in oil and gold, and a lot of issues with customers in Q1 that had to deal with margin calls and dealing with falling asset prices. And 2 headlines to me that really caught my eye were the first one up in the upper right, that ABN AMRO Bank had to incur a $200 million loss on one client in the recent volatility in the markets in Q1, which is quite a bit of money. And then ironically enough, HSBC, after their quarterly earnings were announced, they had $200 million of a loss in one day instead of one client, but and related to the gold market. And as you can see in the bottom chart, which is HSBC's quarterly profits on a monthly run, they had a great run there with the red lines pointing upwards, and then that one $200 million day is that yellow bar that's pointing down, and ultimately their quarter closed on a down note. It's important to express that these are unrealized losses, but nonetheless, even a negative mark to market can have a great impact on liquidity and credit and risk appetite. And that's really what we're trying to highlight in these few slides. Looking now at the flattening yield curve. So we've all heard recently about flattening the curve and how that's a positive thing. And certainly with respect to the coronavirus pandemic, it is good to flatten the curve. However, in the treasury market, the flattening of the yield curve is a negative for banks and their profitability. Just to dive into this a little bit, the treasury curve is essentially a series of government issued debt over a tenor from 1 month out to 30 years. And the rates, according to the tenor, reflect normally a upward sloping yield curve, which intuitively makes sense. If you think about having a mortgage, you're normally going to have a 30-year mortgage at a higher rate than a 15-year mortgage.
Right.
What we're seeing here in this chart is that there are points, and this is a historical chart back from 1980 up until today, where that curve has gone from this normal shape to this shape. So normally banks are going to be able to lend and make money on this end of the curve, and then they borrow on this lower end of the curve, and they're able to capture that difference. But when the actual treasury yield curve starts to go into zero or negative territory, it's not a good sign, not only for banks, but for also the entire economic situation. And I say that because in this chart, which was compiled by the Federal Reserve Bank of St. Louis, you can see that these 6 arrows point to that point where the treasury curve is flattened. And in this case, that means the 2-year and the 10-year are the same. And those gray bars show recessionary periods. So the main point in this chart is to show that we are looking potentially at some downside risk. Banks are already preparing by covering for losses on loans, and their profitability is going to be in question in the months to come. And to round out the bank snapshot here, we can see more proof of this profitability concern. The upper left chart shows that in countries that have had that flat curve or negative curve, as I just described, you've had a reduction in the net interest margins from those banks that are in those countries from 2015 to 2019. As you can see, the US hasn't dealt with this yet, and at this point, we have a 36% net interest margin. But as we can see in that earlier chart and the chart below that I'll explain in a moment, this profit could be hurt, and there could be more concerns about liquidity and profitability in the banking sector. The final chart, as I mentioned, shows the movement of treasury yields from the whole curve, 1 month to 30-year, on a year-on-year basis. And the one takeaway from this chart, you can see the large green bars pushing downwards. That's actually the yearly change in these rates. And on the shorter end, you have almost a 230 basis point reduction, and a 30-year end around 140. So just to wrap this section up, banks are reserving large amounts of cash for potential loan losses. Banks are also negatively impacted by a negative interest rate environment, which will lower their margins. And market volatility and one-off shocks in gold and oil have further hindered bank risk appetite and lending. And that is going to be an overall larger concern for people in the cannabis space and in the metals and mining space. And then my favorite market, which is the gold market. This is where I grew up, and I've been a bullion banker my entire life. I wanted to put a little bit of a slide here about how gold has been responding to this, and also to give a shout to the metals and mining space. In the upper left section, we see the official quarterly gold reserves that's put out by the World Gold Council. They produce excellent data and metrics. And this is just a slate of countries that do have gold in their blood, or that have interest in holding reserves, such as China, India, and Russia. But the point here is, even at an official market sector, they are dealing with currency issues, liquidity crises, the pandemic, and gold is being utilized as sort of safe haven investment and a diversifier for an overall larger portfolio. And the chart on the right, we see a similar behavior pattern instead of the official sector, but on basically Wall Street and Main Street, where you have a product called the GLD, which is an exchange-traded fund that allows investors to express their views in gold without having to hold physical metal or own a mining stock. And that contract is getting near record highs not seen since 08 and 09, which ironically is when we had the subprime crisis. Mining-wise, just a little bit of a snapshot here. We have the Canadian Mining I Index, which is Ernst & Young, publishes this. And in Q1 of 2019, Q4 of 2019, excuse me, they were up 11%. but in Q1 of 2020, down 29%. So again, we're looking at liquidity on a global basis, as we just said, is coming in a little tightly. We've touched up a bit on commodities and how the markets have responded to this concern, and also seeing a little bit of a kickback in the mining sector. Although in recent weeks, the gold price and silver as well has actually responded quite nicely to the crisis overall, as things have kind of worsened in a bit, with respect to China and trade wars and other important factors. So here we're going to drill down into the cannabis space. And this is a great little chart put together by Viridian Capital Advisors that tracks capital raises on a weekly basis. On the right, you can see the steady kind of coming out of the gates, week 1, 2, 3, 4, et cetera. You had some good movement. And then as you can see with the pandemic coming in and the quarantine and this sort of self-isolation and slowing down business, that raising seemed to have leveled off a bit. But the numbers really bear out. If you look at week 15 comparison from last year, you had $185 million raised, and then this year, 8.4. So, the numbers are there. And that's really going to close out the liquidity section where, again, we're seeing at the bank financial level a concern for liquidity, commodities concern for liquidity, and of course, in our industrial hemp and adult use and medical cannabis space, we're seeing further crimping of liquidity.
We've been doing a cannabis week or cannabis weeks here at the CSE, and we've talked to a number of CEOs, and this mirrors exactly the type of information they've been relaying to their customers, to their investors, to their just important people who are related to the company. The one thing is nobody could say, everybody felt that this was coming. Right. But they felt it's been exacerbated by the pandemic. Things were definitely on a downslope from the end of last year and going into this year, and then we just saw it completely level off, just like the chart said. So
absolutely, and that's it's not a surprise. So and this kind of really brings us. Thank you, Barrington, for that comment, because it really brings us to where the meat and potatoes of our seminar today, and that's really well, what do you do? What are the solutions? So one of the things that we've looked at and we'll focus on are alternative financing solutions in the metals and mining space. And then we're going to look at some non-dilutive financing instruments for the overall cannabis market. So here, what are non-dilutive financing? What is non-dilutive financing? And as you can see here in this little text box, it's typically a secured type of transaction that could be potentially bankruptcy remote. And it's a way for reluctant financiers to enter this emerging industry on a physical transactional basis. For example, the financing of a piece of equipment or the financing of inventory that may be idle. But the point here is that it is a nice entry point for financiers to look to explore this space, but also from the client side where they can't access equity markets or they're not large enough to access funds and private offerings. This is another sort of entry-level product that may work for that community. And just to kind of round off the broad sort of 4 categories, as I mentioned, you have asset-based lending, which you can imagine as the word states, it's lending against an asset. Inventory finance, which is financing against idle inventory or maybe inventory that might be in various stages of process. Equipment finance, which we're going to focus on as well. And certainly Thriving Roots Collective has been working on developing a platform for equipment financing. And then in more mature markets, metals and energy and base metals and precious metals, you do have trade finance where you're helping to finance commerce and movements of cargo from, say, copper mine in Chile over to China.
Mm-hmm.
What's interesting too, as you mentioned in Q4 with the sort of downtick, these companies still have to make money, they still have to build, they still have to acquire. So what I'd like to highlight here are 2 flagship deals that we've seen that underline the value in the non-dilutive financing area. And as we've probably been talking about ad nauseum, is the syndicated loan that Curaleaf was able to procure in Q4. I watched your web interview the other day with Joe Lasardi, which was great. And, he mentioned it at the time, but I want to give this one quote, which is in the release. He said, importantly, we have raised debt capital at attractive terms without the need to dilute our shareholders, which is exactly what is non-dilutive financing.
And it's exactly what we got from all of the CEOs that we interviewed over the past few weeks. They're some of the biggest multi-state operators around, certainly the largest ones on our exchange, and they have options available to them as far as raising money, and they have to be very, very careful on how they manage it. And the theme throughout it was, shareholder protection,
Right.
preservation of capital, while still moving forward. And Curaleaf just announced their results, and they blew the doors off. They absolutely blew the doors off of their earnings, and they're handling it in a correct way, just like Joe Lusardi had said.
Absolutely. Yeah, I saw that earlier, 96 million or something record revenue. And, another big feature has been Green Thumb Industries, right? Or had that nice quarter for US-based cannabis stocks. So, certainly, even though, as you said, there are some, we're in a sort of downtrend. There are some bright spots.
For sure.
And moving aside here to another non-dilutive flagship deal that I've highlight is Monroe Capital providing $50 million credit facility to Cushco Holdings. And that is more of a traditional asset-based lending facility. But again, you can literally hear the non-dilutive aspect in Nick Kovacevich's quote here, where he says, "We're continues to execute on its less dilutive financing strategy that will provide the capital necessary to support our continued operations and acquisitive growth." And really, and that hits the nail on the head. Between these two major players, we're seeing two examples of non-dilutive financing. And that's why we feel, certainly from the sort of lower rung of corporate clients that don't have access to these types of deals, the non-dilutive financing route may be an acceptable and interesting option for them. Now we're going to put on a little bit of a metals and mining spin here and just look at alternate capital providers. As I mentioned, we talked about how the liquidity in the market is drying up at the moment. And this is a smattering of companies that are looking at alternative ways to provide capital to the metals and mining sector. Full disclosure here, I am a advisory board member for American Condor. And to highlight them is the reason for that is that they are a mining finance outfit looking at companies that are 12 to 18 months away from commercial production, and which is nothing new. There's plenty of mining finance operations out there. But what is interesting with American Condor is that they've also launched a security token, crypto coin essentially, called Condor Capital Coin. And the idea there is that the coin will launch and generate proceeds. Those proceeds would go to actually finance the mines. The mines would then yield and produce gold, and the gold would go back to support the coin. And ultimately, over time, you'll have a gold-backed security token. This isn't new in the industry. There's a company called Paxos that has a Pax Gold token, which is fully gold-backed, but that's more bars and coins and things of this nature. Whereas with American Condor, it's looking to get that back from on the organic side, via developing mines and taking their output. On a transactional basis, two good examples are Kimura and Argentum, which are looking at build themselves as alternative credit for corporations. So again, as we stated earlier, trade finance, inventory finance, also physical offtake, which is very interesting. And I think will be really exciting when we can develop this into the broader cannabis space, is a financing vehicle where you agree to take the physical output of a particular operation and you pay for that ahead of time, or you agree to fund money and get paid back in that physical manner. So these are well-developed instruments in metals and mining. And as I said, these are some alternative capital providers. Looking down now at Asia-based corporations, as I'm sure you know, Barrington, Vancouver's seen a lot of Chinese investment. Yep. There's a lot of mining investment in Africa and in other nations. But Shandong, which I'm highlighting today, actually recently purchased a company called TMAC Resources, whose asset is in Canada. So I'm bringing that up because it's very interesting. Where China used to kind of work in those tougher jurisdictions, they're still very strong in their appetite, and now they're looking at assets that are within North America. And then rounding out the group, the Algon Group, I'm actually a senior advisor for this company. This is a group that's focusing on sort of complex situations and distress situations. If you look at the Insolvency Insider that's published weekly out of Canada, every other week or so, there's a cannabis company or another company seeking protection. So hopefully the idea is not to want to call these people, but if you have to, this is a group that does a lot of work, has the experience in commodities, and has been looking on a case-by-case basis at some of the industrial hemp and adult use and medical cannabis clients that may be running into difficulty. So
Well, distressed assets is definitely a theme we've heard about a lot in 2020. Those two words side by side.
Absolutely. It's, you know, we're in speaking to the partner, the founding partner the other day, he was telling me that the hospitality market is what he's very much concerned about. And it makes sense. You think of hotels.
Oh, yeah.
Yeah, you know, strip malls that have rents and they're not meeting those rents. So this is certainly a group, and there's many providers to this type of debt, but this is one that I happen to be affiliated with and that has experience in the commodity sector. So now looking back to the title, Dude, Where's My Capital? We've been able to kind of show the client side where they can go seek and find capital. So now we're going to switch gears a bit and look at the risk management tools for financiers. So basically help them to keep an eye on their capital.
Right.
Leading off again, full disclosure, I'm a senior advisor for RS Metrics, just to get into them. And I think they're very meaningful from a post-pandemic environment as well. But RS Metrics is the market-leading company for satellite imagery and geospatial analytics. One of their main instruments is called Metal Signals, which basically is a predictive data set and platform for global metals, basically base metals and iron ore. And what they do with their satellite imagery and geospatial analytics is try to track pricing, movement, respond to one-off disaster events, and also have a pretty rich backlog of 5 years of financial data, historical data, to look back and see how these changes have occurred over time. So if you think from the mining side for a moment, if you're looking to invest in a mine or there is a disaster event at a mine, it's much harder to get to that mine physically now more than ever. And this is an option that can allow you to see from, you know, albeit a 20,000 foot view, to see good granularity. You know, was there a burst in a leach pad, or is there some flooding, things of this nature? Or you might want to see if a mining client that said they've done environmental remediation, you can look back and see how that has progressed. Specific to industrial hemp now and the medical and adult use cannabis space, we are working with RS Metrics to develop a similar platform, but for outdoor grows. So you can imagine a reluctant financier looking to maybe lend to a farm or to purchase acreage. This is another layer of protection that they can have eyes above on the plants. And there is some development with respect to infrared technology that can actually look at the temperature of these plants, you know, whether they're red, you know, lower, or green growing, you know, higher. So it's quite amazing stuff. And the group's been very interested in collaboration and development of products. So this is a type of platform, as I mentioned, that has use in the metals and mining space, and also a good application for reluctant investors, financiers into the broader cannabis market.
And it's very, very well timed, because as we enter this new, usual times, people are going to be traveling less. People are going to want to not touch or not physically hold or see. And this is a good way to, like you said, to keep an eye on things.
Absolutely. And then again, along that point, again, you know, keeping an eye on your capital and being wise in how it's deployed. This slide kind of talks about three main points: transferability, real-time monitoring, and robust SOPs. So transferability, I'm going to explain that with a story, really. I was at a conference a couple of years back, a metals conference, and I met with a Italian equipment manufacturer called Italian Pianti. And he was telling me that he's getting all these inbound calls of people looking for filter trolleys and presses, which made him, he was puzzled at the beginning. And then in developing these leads, they were actually from hemp extractors in the States. So it's kind of interesting how you're having this crossover from precious metals into into the broader industrial hemp market. And these filter trolleys and presses are used, as I understand, as part of the hemp extraction process, where you get the raw material and then you can derive the finished products. But what's interesting here is if you're a financier that's financing this equipment, it's good to know that you have an exit strategy, right? You can say, look, this isn't customized equipment for hemp or for other applications. This is a instrument that's been used in other developed industries. And that's what I mean by transferability.
Right.
We also see this in Violet Grow, which has a series of highly efficient, LED lights that are used for controlled indoor grows. As you can imagine, these lights can be used for lettuce or tomatoes as much as for medical and adult use cannabis. And that another example of that transferability is that Violet Grow has launched a UV disinfection solution using their lights to help increase the turnover of PPE equipment at hospitals and maybe even at hotels and things like this. So speaking to their owner, one of the partners the other day, he mentioned that he's donated some of these units to help local area Colorado hospitals get that equipment turned over in a much quicker way. And the theme again is you have equipment that can be easily deployed in other areas, so you're not stuck with it, if you will.
And there's another thing to keep in mind. It's not just a one-time transferability. So you can go from one industry in one sector, it can be used in another industry in another sector. It can actually then go back to that first industry, and that way you're able to cover your bases.
Absolutely. And then real-time monitoring, which is a theme we've seen in the let's call it the indoor grow space, with IoT technology and real-time data. Violet Grow has teamed up with Hyperponic, and they have essentially a system that's linked up with these lighting arrays to provide real-time monitoring and maintenance of this equipment. So you can reduce labor, be more efficient with water and power, automate a lot of procedures, and really keep an eye, are these people using the equipment properly, frankly? So
right.
From that point of view, real-time monitoring is important. It's important if it's 20,000 feet above, and it's just as important if it's right in there inside the grow. And to round out this slide with respect to robust SOPs, standard operating procedures, Violet Grow, from our discussions with them, they take an extra layer and they actually deploy an employee with each customer where they deploy the equipment. So talk about, eyes and ears and boots on the ground. That's a great example, and which is why I think it's relevant to highlight them, because they tick the box, if you will, as far as transferability, real-time monitoring, and robust SOPs.
Awesome.
Now moving on to insurance, which we could probably do another 40-minute seminar just on this slide. But I think it's important, again, from the risk management side, we don't want to highlight metals at this point because there's such a developed market and there's plenty of insurance products available. But hemp is now really starting to come into play, and recently announced the USDA has launched a pilot program for multi-peril crop insurance. And this is important because instead of just having a sort of umbrella coverage of your farm, if you will, this will cover yield losses in hemp fiber, hemp grain, and hemp-derived CBD. Again, from the financier perspective, if let's say you're financing an operation, you're going to want to make sure, A, that this insurance is in place, but also perhaps that you're a loss payee on that insurance. So if there is a claim, you have some rights to that. And that's what I mean by managing the risk. Trying to use tools to keep an eye on your product, to minimize risk if there's an exit or a default, and also to use insurance programs and government issued vehicles that are available to help protect not only the grower but the financier. And then this is our last slide with respect to the financial tools for financiers. And this is really about the development of the market. So we have transparency, price discovery, and market development. The PAN Exchange, which I've been able to look up on, I'm sure you're familiar with them as well, Barrington. They launched in Q4 2019, the first physical hemp market exchange. And it's great to see this. Push.com has a similar platform, but I think they're more on the D2C, direct to customer side. But the point being is, well, right now there's no official marketplace, there's no futures markets, you can't really do anything. These are the beginning of a development of a market, which I think is very exciting to be a part of. And I want to highlight these two examples in that they seem to have made the most progress thus far.
Well, when we used to attend, I'm going to say way back when, 2 or 3 years ago, and people always wanted to do the forward thinking and what to look for and what's coming up next. And the one thing that was consistent was data, and data information. That itself was and has become a commodity. And things like the Pan Exchange and Kush.com, at the end of the day, they're providing data. They're giving the customer, they're giving the investor information, and you can base your judgment and decisions off of that. And it's real time, it's accurate, well, as accurate as it can be. All of these things are great. All of them.
Absolutely. And, so moving on, as you said, transparency from a price discovery perspective, as you just highlighted, New Leaf Data Services has their cannabis benchmark and hemp benchmark, which show pricing on those various products. And again, it's just all in the development of a market. And finally, rounding out this side is New Frontier Data, who you can see is featured throughout the webinar, and BDSA, which again, they're looking at distilling research, showing trends and forecasting, and really giving both sides of the market the tools needed to make informed decisions.
Yeah, we've worked with New Frontier and BDS Analytics very, very closely. So excellent. It's good platforms.
And that rounds out, the sort of risk management side of the webinar. And we're going to kind of now go to the closeout section and do the reading of the smoke signals.
I love it.
Yeah, keeping the theme. So here, this is actually, as you just mentioned, the New Frontier data is fantastic. And this is a really, really prescient slide that shows the coronavirus pandemic, right? So you have on the left, you have what are considered disruption events. And then you have on the right, what are the views of how cannabis can actually come out ahead of this thing. So I think one thing we definitely want to highlight is the idea of an essential business, right? Here in the States, yeah, I mean, medical cannabis stores were viewed as essential, so they weren't closed. I know Toronto had also viewed adult use and medical cannabis as essential, but then they made a decision and shut down the adult use side of the stores. But I think just being categorized as essential, I think for the people that I speak to, this is a really big stepping stone as far as the acceptance of the overall cannabis market into the trade and commercial markets.
Oh, absolutely. It's an essential service. There are medical patients. It's medicine. Right. And to deny it, especially during these times, it can't be overlooked.
Absolutely. Not at all. Absolutely. I saw somewhere, and you correct me if I'm wrong, but I heard that, for veterans in particular, at least certainly in the States, at least, I'm not sure exactly how it works in Canada, but if you were to apply for, say, a medical marijuana card, medical cannabis card, excuse me, you stand to lose your veteran benefits.
Yes, that's correct.
Okay, yeah.
I believe that's a subject that's close and dear to Joe Lasardi's, to his heart, right. And that's one of their driving forces is the way that we treat our vets.
Absolutely, absolutely. And I think this type of pandemic obviously is disruptive. It's cost thousands of lives, but we have to try to find a way to come out of that. And I think that's something that will be positive, is to get this recognition that's needed. And then another feature on disruption section is supply chain. As I mentioned earlier, China, over 80%, I believe, or 70% of the exports of hemp come from China. Whereas here you have the ability to grow locally. As you can see in this chart as well, cannabis demand is typically hyper-local. So this pandemic is, in a way, oddly enough, laying the groundwork for these industries to survive. So it'll be interesting to see how that goes in the months ahead. And then finally, rounding out this slide, we wanted to mention a little bit about the Safe Banking Act, which the insurance journal says it could be put the industry on steroids. I'm not as optimistic about it, as nothing looks like it'll come through by the end of this election cycle. But the point is more about general acceptance. And the Safe Banking Act is essentially going to allow depository institutions to transact in this space and support these people without the stigma of getting of illegality. And that's an important point to the overall development of the market.
When we're talking with the CEOs from the past few weeks, we asked them their Christmas wish list: legalization or banking. And I think it was 4 out of 5 or 5 out of 6 said banking.
Absolutely.
No question. No question. So, but the ones that did say legalization had they had some pretty good reasons for it as well. So I don't want to ignore that, but overall they would prefer to see banking first. It would be the easiest one over legalization to pass through.
And then wanted to touch up a little bit on the hemp side, of the cannabis plant. And really interesting here, again, it looks like a negative chart, but to me, I view it positively. You have these yellow states that explicitly forbid CBD in food products. And then a smattering of blues that allow it. And the point here is that this is a major feature to the development of the CBD market. And if you can start to allow for the infusion of this product into foods, you're opening up to a much broader product offering and also a much larger consumer base. So we're happy to see that. Hopefully this will change over again as the overall market develops. And I think as part of that development, the USDA recently launched a loan program in 2020 that will provide capital for hemp producers, which is fantastic, right?
Wow.
Support and allow some of these operations to flourish. And then ultimately, to end this note, you have all but 2 states, Idaho and Mississippi, allow some form of hemp cultivation. Could be research level, it could be commercial, but the point is the overwhelming majority of the U.S. is looking and moving towards this.
Oh, that's, you know what, 2020 is, this is definitely a silver lining for this year. And
then kind of to close out, really, it's a shame. I'd love to speak all day about this stuff. Not running out of time here, but I wanted to close out with a just kind of forward-looking view. Again, a great survey that published by New Frontier Data. And the question is exactly to your point. Since the coronavirus pandemic began, how much of a challenge do you think each of the following will be for the cannabis industry in the year ahead? And no doubt, number one, 65% securing access to capital, which highlights exactly what we've been talking about all day. And then
it's you know what, I wish we did have more time to talk about it, because that has to be, when I used to go to conferences, when our team used to travel, that would be one of 2 questions within the first 3 sentences. Securing access to capital. How do I get it? Where can I get it? Do you know people who do it?
And that's the hope of this webinar today, is just to illustrate to junior minds and participants in the hemp, adult use, and medical cannabis space that there are avenues and ways to try to procure financing outside of the traditional equity markets. And as you can see, number 52%, the second most concern is access to banking and financial services. And this is simply being able to have credit cards, or being able to take wads of cash that are now being stored in vaults or behind, in rooms, and actually putting that safely. And funny enough, with the pandemic, a lot of these lobbyists are rightly so. They're saying, look, handling cash can increase infection. So let's allow for this merchant banking and financial products, electronic and digital, to occur, so that you don't have so much actual handling of physical cash.
Right. Isn't that ironic? That's what it takes.
Absolutely. And then the last 2 points I'll make here is, as it says in the bottom, which is a little bit encouraging. Maybe not so much at the higher levels. You can see some of the major cannabis companies have had to cut staff, but 63% expect their staffing to increase or stay the same, which is encouraging, from a human perspective.
Right.
And certainly, talking their book a bit, but the signals seem to be showing this. 75% expect consumer demand to increase in 2020.
Oh, I believe it. Especially when there is an increase in the discretionary, the more subtle forms of, as far as edibles,
Right.
drinkables, consumables. Once those really come in, and it will tie into the CBD and having those types of things, I can see that 75% number being accurate.
Excellent. Well, that's all good news. I mean, like with any industry, any market, you need participants, you need financiers, you need corporations, you need consumers, and hopefully, we'll see that in the years to come. So this slide pretty much wraps up the webinar for today. Barrington is absolutely great. Working with you and speaking today. I'd love to.
No, this was all you. This was all you, man. This was this was great. And you know what? The majority of our companies on the Canadian Securities Exchange are in the mining and mineral exploration or in the cannabis sector. So this is well timed. It covers a lot of our foundation, and we definitely appreciate you taking the time, and the rest of the Thriving Roots Collective, for speaking to us and giving us an education of
Oh,
what's
my
out there.
pleasure. My pleasure, Barrington. And hopefully I'll see you up in Toronto soon. Maybe we'll go out to a hockey game if it ever starts up.
Well, you'll be on one side of the
Yeah.
arena and I'll be on the other, keeping our social distance.
Right.
For our listeners, because I think this is going to be made in a podcast form, James, tell them how they can reach you.
Sure. So I'm available on several websites. Gavilan Commodities, of course, is my principal site, and that's at www.gavilancommodities.com. Thriving Roots Collective, of which I'm one of the 4 founding partners. We're available on www.thrivingrootscollective.com. My emails are also listed there, but for Gavilan Commodities, it's jgavilan@gavilanc.com. The presentation is available on request as well.
And for our listeners, this will be available on our blog at www.thecse.com. This might be available on YouTube under CSE_TV. I'll have to double check. And as far as the podcast, it'll be available on SoundCloud, Buzzsprout, iTunes, Apple Play, and Spotify. So
great. I'm famous.
Famous. Well, thank you for taking the time, James, and thank you to our listeners and our watchers. This has been an episode of #Finance, and we'll see you soon.
Thank you, Barrington. See you soon.